Throughout the pandemic, we've heard a lot about this great exodus out of cities into more suburban and rural areas. But what has the impact been on the rental market? Here to talk about that now and for a closer look is Jonathan Miller. He is president and CEO of Miller Samuel. Jonathan, always good to see you. I know that
Likewise.
The pandemic has left lots of landlords sort of rolling out the red carpet to entice people to come back to some of these large cities. Rental prices have come down quite a bit, but it seems as though they're starting to come back in places like New York City. What have you been seeing?
Yeah, that's exactly right. We are seeing, in fact, beginning in the fall and continuing to escalate, we've seen record new lease signing activity. Rents are still off of pre-COVID levels, but what it's actually doing is it's bringing in a younger cohort, essentially, something I call a youth renaissance into many urban areas where younger people that were priced out are now coming into the city. And in fact, in certain segments of the rental market in New York, we're actually seeing bidding wars on some sought after type units. I'm not suggesting it's a tight, frenzied market, but we are seeing pockets of behavior that we haven't seen in a long time. So it's quite a shift from last year.
When do you think, Jonathan, that some of those rental prices will come back up to some of those pre-pandemic levels? I hear what you're saying. Some folks that weren't able to afford some of those really pricey New York City apartments are able to snag them now. But for how long do you think they'll be able to enjoy the benefit of some of these depressed prices?
Well, I think at least the significant declines, we're looking at 15 to 25% price correction here over the course of since the lockdown itself. But what we've really seen in the last few months is we've seen stabilization of pricing. And in fact, one thing that has become very apparent in the last couple of months is the length of leases that tenants are signing is surging. And that's an indication that the tenant believes that rents aren't going to fall any further, and it's time to sort of lock into a longer rental term and enjoy the savings for a longer period of time.
Do you think people who were hoping to sort of benefit from all the perks that landlords were throwing in to rent with them, has that window of opportunity gotten smaller or closed altogether, Jonathan?
It hasn't closed altogether, but it's closing. And this is evidenced by we're seeing actually on a month-over-month basis in the recent report we released for Douglas Elliman today, the month-over-month increase in net effective median rent, meaning median rent that includes the concessions that landlords are offering, is the highest month-over-month increase, still well below year-ago levels, but the highest year-over-year increase since 2008. So we definitely are seeing upward pressure develop, something that we haven't seen in a while. And I think if we look even further out, corporate America is going to start calling their employees back sort of en masse. Probably not as many will be returning as left, but in September or sometime in the fall. And that's that'll be another big leg up, in terms of demand for the rental market, that there'll be more certainty of where you're going to be working. It doesn't mean that they're all going to be in the office. One point I want to make about that is sort of the remote working aspect, which is, changing everybody's life seemingly. There's a narrative that, remote work means that you live in the suburbs and work in the city, but that's not really accurate. It's going to be, it's also going to be, you're going to work in the city and live in the city. People will be remote working. I think it's evolving into sort of an employment perk in terms of how much flexibility the employer has on where they live. And we're going to see that evolve over the next couple of years.
Jonathan Miller, President and CEO of Miller Samuel. Always good to see you. Thanks so much.